All right, what's up, everybody? It's your girl Cha. We're putting live from the Money Mantra, and we're back with another Forex education video. And today we're going to be talking about some common mistakes that traders typically make and pretty much what you can do to avoid them or just become better at them. Because if you're on a trading journey, it's like we're all going to experience the same things at one point or another, but when you do it enough, or if you stick with trading long enough, you'll realize that it's just a part of the process. And going through that process is what actually made you a better trader. So, yeah, that's it. That's what we're going to be talking about today. Some common trader mistakes. Now I have a long list because these are all things that I've done before as a trader. And some things I'm still working on being disciplined at. But yeah, everybody's on a different trading journey, learning different things at different times. But there are some core things that I think we all have to understand if we want to be considered professional traders, or we really want to make this or continue to make this a viable stream of income. So yeah, for today's lesson, I'm going to be using TradingView for the analysis. TradingView is a free site that you can use to do your trade analysis no matter what you trade. As you can see here, you can analyze your indices, your stocks, your crypto, your Forex, which is what we'll be focused on, futures, and bonds. So TradingView, of course, is free. You can get everything you need to get from the free version. And if you want to upgrade, that's completely up to you. So I have my watch list over here. So these are the pairs I typically look at. And in my previous videos, you can figure out how to add things to your watch list. But yeah, I'm going to start with Euro USD. This is one of my favorite pairs, and I'm going to click see on super chart so that it actually takes me to my chart. Now, the first mistake I think that a lot of people make when trading is pretty much overcomplicating their analysis. And the answer to that is to simplify your analysis. Now my chart, I use a total of, it's usually 3 indicators just so I can go along with the free version so people can follow along. But I have 4 right now. But the indicators are only confirming what you see. They're not really telling you anything new. So for the first part, when it comes to simplifying your analysis, we have to be able to understand price action. So I'm going to go ahead and delete that too. We have to understand price action. So price action is literally everything that's happening in the market. We know that the market is composed of buyers and sellers. We know that if the market is, the pencil, we know that if the market is on a down slope, right, it means that there are more opportunities to sell, right? And we can see that the market is dropping. We can see that it was here. Then we can see that the highest point was here. Then we can see that the highest point was here before there was a little turnaround. So you can really identify the trend by looking at it, right? And the indicators are just going to confirm what you're seeing. So just like that was a downtrend that was represented by the shape and the majority of red candles, we can look to the left and see how there was an uptrend, right? And the uptrend is going to be distinguished by the shape, right? It's going to start from a low point, and then it's going to keep creating these new high points, letting you know that price is rising before the reversal comes, like we see here, right? So it's pretty it's a pretty, you can do a naked eye analysis before you start adding indicators to your chart. Personally, I do like to trade with the more naked chart simply because once you add the indicators again, they're only confirming what you're seeing. They're not adding anything new. So to understand that and to be able to simplify our analysis, we have to figure out, okay, why are we overcomplicating it? And it's because we're trying to figure out, it's called a harmonic pattern. What is the market going to do next, right? We know that it's creating these series of highs and lows, highs and lows, highs and lows, highs and lows, right? But we have to figure out, when do we get in? We have to figure out, when is it going to buy? When is it going to sell? And your indicators
Indicators
are
are
great.
great.
Oh,
Oh,
Teresa, I think you gotta mute yourself. Okay. Yeah, the indicators are great ways to confirm what you're seeing, but they're not the end all be all. Now, one of the most common chart patterns that we should be able to recognize is called head and shoulders. And head and shoulders simply is a reflection of the up and down that's going into the market. And I'm just going to look at some past market action to give you an example of this. So you can see that you don't really need to add all those indicators, but if you take your indicators off, do your analysis, and then add them back, they should be saying the same things. So Head and Shoulders is pretty much like this. I'm going to draw it out. So there's going to be a low point, right? So then it's going to rise. I'm going to draw it first. All right. So this is the Head and Shoulders pattern, and it's one of the most common patterns that we can recognize in the market. And it's pretty much, you can call it an M, but this is the left shoulder. This is the head, right? And if you want to draw a little smiley face right here, that's what Orrin Wright used to do. And then this is the right shoulder, right? So pretty much we know that if the market is down and then it comes up, once it starts to reach a peak, and we also see that we have some liquidity here, right? And liquidity is just represented by wicks. I should zoom in so we can see it a little better, but we see those wicks there. So we have the liquidity and we have the left shoulder that's not fully formed, but in order for it to be formed, there has to be a sell, right? There has to be a sell. So this new low just has to be higher than the previous low, right? So that the pattern can continue. Now, again, this pattern goes on and on and on, and I'll do another example just so we can see that this happens all the time. And based on where the market currently is in that pattern, it's going to help you determine whether you should be buying or selling next. So let's look. All right, so here's a really good one. We should be able to see it even before I draw it. So we see that the market was at a low point, right? You always know the market is about to reverse or is going to buy. If you start to see wicks, right?
Oh, your class started.
The wicks are going to be, they're going to start to resist at a certain point. It's going to push down, right? That's how you know a buy is about to happen. Now, this is without any indicators. It's going to be coming off a selling trend. It's going to be hitting a point. You're going to see where it starts to resist or there starts to be equal lows, and then it's going to go up, right? Now, this is only one line. This isn't a left shoulder. This isn't the head. This isn't the right shoulder. So once the top of the left shoulder is complete, you'll start to see these wicks form. Now, the wicks are just telling you that price is resisting going any higher. Like, think about this as like a tug of war. You have some pulling it down, some pulling it up. But once we start to see that liquidity form, we know now we can start to complete the left shoulder drop, right? So once you see a new area of support forming, right? And we know that a new area of support is forming because we have the wicks. 1, 2, 3. We have 5 wick rejections, so we know the market isn't trying to go any lower. So it's going to push back up. Again, we have that resistance. Now we completed the head. We can draw a little face right here, right? And then, of course, it's going to come up, make the right shoulder, and drop back down. So that is a pattern that's very easy to recognize. And we can go to, the market is open now, so we can go to what's currently happening in the market, and we can see where the market is in that pattern, right? So we can start from here. We see we have our support, right? Based on the rejections here, we can tell it's about to go up. Now, if you guys can see that, and you would have thought this was a buy, right? Just drop some 7s in the chat, right? Just based on the wick rejections, even without the indicators. Now we can add them back to confirm. This is a reversal trade. All right, so we can see that this was the signals for reversal. We have the liquidity, we have this facing up, and we have the blue crossing over the orange also facing up. So I'm gonna take them back off. Oops, sorry, y'all. All right, so we have the left shoulder, right? We have the first part of the pattern starting. So we have our liquidity telling us it's going to sell. Then we have up. down, up. So right now, we're currently at the top of the right shoulder. Again, we could draw a little face right here so we can see. We're currently at the top of the right shoulder. If we're at the top of the right shoulder, guys, do you think the market is going to buy or sell next based on the head and shoulders pattern having to be complete? Right? And you can just drop your answer in the chat. You said it can go either way. Okay, it's going to sell then buy, but what do you think is the next immediate thing now? You think it's going to buy or you think it's going to sell? And this is where you can re-add your indicators. Let's see. If I put it on a higher time frame, it's going to change the pattern. Right? Okay, so Teresa said buy, Joe said sell. For this, I would probably say it will be a sell limit. Like Joe said, I think it's going to probably come up a little bit higher just to meet this high, and then it's going to come down, right? But you always have to remember, like, if you're looking at the market, I just always want you to look at it and see where is it at in the pattern, right? Because the whole point is to be able to simplify your analysis so that you're not overcomplicating it. So you can take your indicators off and we can go to another pair. And if we just look at this based on the up, down, buy, sell pattern, what would you guys say that GJ is about to do based on the head and shoulders pattern? Right, and I'll just give you guys a few seconds to answer in the chat. Oh yeah, for the sell, right? Yeah. So in this example, I would say GJ is about to sell simply because we have the one side up. It's going to have to come down to complete the pattern, right? So again, essentially we could set our stop loss here, or our stop loss here, or our stop loss here. Or we can set sell stops so we can catch all the pips on the way down, right? So even without indicators, and I'm just going to switch to another pair just really quickly. So the purpose of this, oh, and Teresa, what I'm basically going over today is the common mistakes that people make when trading. So the first one is overcomplicating the analysis. And right now, I'm just talking about how to simplify your analysis by removing the indicators and understanding price action. So if I go to USD CAD, right, we can see that if we were going to do the head and shoulders pattern, we have one side that's complete. Now, what do you guys think is the next thing that's going to happen based on this chart pattern, right? Before we use the indicators to confirm. I might look at this and say, this is going to buy. Just because I know if I'm using head and shoulders, just by looking at it, it has completed this. Then it's going to come back up. Then it's going to come back down, right? Now I'm going to turn the indicators back on to see if that also confirms for the buy. Yes. Yep. So this is looking like it's a reversal, right? It's look like it's probably going to come back up to the EMA, right? And it might go back up to this EMA because that's the previous high. We have the MOM about to cross up, and we have the stochastic crossing up at the bottom, right? So if you've been using too many indicators, you've been switching your strategy too often, I guess your challenge for this week would be to just take all of that stuff off and just really look at the market because it's easier than we really believe it is. Here's another one. We could just look at it. This is a sell, right? This is going to be a sell based on the up, down pattern, right? Based on the up, down pattern. Now, there's something called inverted head and shoulders, but it's basically a W. But as long as y'all understand how to look at that, we should probably look at this trade for a sell right now, y'all. If y'all want to get into this trade for a sell and then set your TP right there, you can. But let's confirm it with the indicators. Okay. Okay, still gonna be selling for a minute. Yeah, so GBP USD y'all can look at for a sell right now if y'all would like, just because it's looking like that's what it's doing. But yeah, we're gonna move on to the second thing that I think traders, well, actually, if you guys understand how to just look at the naked chart and use price action, you're gonna try that, or you already do that, just drop some sevens in the chat. I don't want to move too fast. All right, guys, let me know if you're good on the first point. Okay, so I'm gonna move on to the next point. So the next thing that I think people don't do, or I think that they struggle with a lot, is again just having a lack of confidence and not really trusting your trade, because you're still stuck in like, is it gonna buy? Is it gonna sell? When's it gonna buy? When's it gonna sell? But if you simplify your analysis and you can say, okay, this market looks like it's more likely going to sell than buy, then I think you just set yourself up to be more confident. And if you also understand liquidity, and that the market is always going to be going for these liquidity grabs, and the banks are going to be trying to take out the smaller traders, then I think that you'll have a lot more confidence in your trades. And I don't think that finding your TPs or stop loss should really be a struggle. And I don't think that having losing streaks in your live account should be a continuous thing. So for example, let's continue to look at GBP USD for a minute. So we can see, let me just delete this. So basically just looking off of our basic analysis that we just said, it looks like this market is going to sell, right? So, but also adding to simplify your analysis and trusting your trade by having a simpler analysis, is going to be helpful to improve your trading if that's something that you struggle with. So the first thing you're going to do after you figure out, okay, I think this market is going to buy or sell, after you just look at it, you should set up your support and resistance, right? Now, it's a very common topic, but I just still think it's something that be throwing people for a loop. So just make it simple, right? If you see wicks like this, right, no matter where you see them, at the top or the bottom, if you see the price starting to consolidate or stay in one area, that is where you want to add a line, right? And whether it's going to be your selling line or your buying line is going to really depend on the other things that the market is doing. So we're going to add a line right there. And then we also going to add a line down here, right? Because we can see, let me get the line. Because we're going to add a line down here because we can see at some point in the past, the market was consolidating down here and it was consolidating here, right? So wherever the market is consolidating at, those are going to be your entry and exit points, right? Because I know a lot of us focus on, okay, where do we get in and our TPs, but the TPs and SLs are still your entry or exit points, depending on which way the trade go. So simply, if you're getting in for a sell, right, you want to, wherever your entry is, if it's down here, your stop loss would be a little bit above the previous high, right? It's really that simple. It's going to be above the previous high because if we're expecting this market to go down, we're not expecting it to be creating new highs. It shouldn't be creating higher highs, right? If it's going down. So on MetaTrader 4, which is the app that I like to trade on, but there are other app variations that you can use. On the quote screen, you can either have it on simple or advanced, and the advanced tells you what the lowest low is and what the highest high is. So if you're going for a sell, for example, GBP USD, we can see that the last previous high was 1.26356 if you're looking at MetaTrader 4, right? So you would just want to set your stop loss. If we were going for a sell, you want to set your stop loss a little bit above the previous high. So that's a shortcut too. You can use the one that's directly reflected in the app, because remember, if it's selling, it should not be creating higher highs. It should not be surpassing that high. And even if it is going to surpass that high, based on the liquidity, is just going to tap it, right, a few pips above, and then it's going to come down because that's what typically happens. And same thing with the lowest low. So if we were going to get in this trade for a sell, our stop loss will be above the highest high, and our TP will be based on where the last liquidity was, right? And also, right, it's something called, we talked about this in the previous classes, and this is also comes with simplifying your analysis. Trade the gap, right? You have to trade the gap because the market has to fill in and correct itself, right? Back to the head and shoulders pattern, no matter how big or how small it is. So if we got in for a sell here, right? And Killa, this is just the pair we're analyzing. First thing we talked about was just head and shoulders, which is the pattern that goes up, down, right? So it's the left shoulder, this is the head, and then it's the right shoulder. Oh, it's okay. I just want to catch you up, which is the left shoulder, the head, and the right shoulder. So that we're familiar with this pattern. We see it all the time, but this is just a common name for it, which is the head and shoulders. So if we said this market was going to sell, again, our stop loss will be here, and then our TP will be where the last liquidity is, because if we're going to trade the gap, we know that the market has a big gap from here, actually all the way down to here, right? There's a big gap that has to be filled. So if it's going to sell, not only is its purpose to fill this gap, but its purpose is to take out these people here, right? To take all these people out the trade who got in for a buy and set their stop loss down here. So yeah, sorry, 1 second. So yeah, pretty much is you can have more confidence in your trade if you understand what the market is doing. If you understand the up, down, if you understand how to use the simple horizontal lines to set up your support and resistance, then you really should. If you use the MetaTrader 4 high and low, you should be struggling with your entries less and less because you have more information to rely on, right? Like it's one thing to just accuse somebody of something, and this is a crazy example, y'all, but it's one thing to just accuse somebody of something without any facts or hardcore evidence, but it's another thing to have your receipts and have everything, your ducks in a row. So you're like, I am confident that this is the truth, and this is what's more likely to happen based on the information that I have, right? Based on the information that I have. So again, after you have your simple analysis and you understand that you can use previous entries, right, as your support and resistance, again, it becomes easier. And to make it even easier, right, if you, let's just say you want to simplify a chart, you don't want to use the momentum or the stochastic, but you only want to use the EMAs to keep it simple, right? You can also use your EMAs as your support and resistance. So for example, if we were to get into a sell up here, then we can set our TP here, right? Because this is the area of support. And we know it's the area of support because look at previous trades. Look at this area. It was supported. Look at this area, right? And it's all along the EMA. And I like using 2 EMAs versus 1 because we know that if the EMA breaks structure, it's going to the second line. And I'm going to show you what I mean here. So we can see that price was supported here, right? Along the blue EMA. It was an area of support. Then we can see that it broke structure, but it only came down to the second EMA, right? It didn't really go too crazy. And this is why I say, if you're using the EMAs as an indicator or a confirmation, when the candles are above, we know we have more chances to buy unless it's a reversal. And when the candles are below, which, let me just scroll to the area. Okay, like such, when the candles are below, we know that now is using the EMAs as a sell, right? It crossed below, it was selling. First, it was resisting here. It was selling, right? So we can be more confident in our analysis, again, when we understand what the market is doing and what these things are telling us, right? When the market starts to consolidate around the EMAs, based on which side is on, you can like kind of guess it's going to buy. For example, here we can see the market was consolidating above the blue EMA, so we knew it was going to continue to buy, right? We knew it was going to continue to buy, right? We can see that it was consolidating here, right? And then it continued to buy. So that's just a way to really trust yourself. If you can set up these horizontal lines and you can recognize the head and shoulders pattern, you'll be fine. So I just went back to Euro USD again, and I'm gonna take these EMAs back off. So we're gonna look at our head and shoulders, and we're gonna see which part that you guys said previously that this was gonna sell, right? So since we think it's gonna sell, let's find where our liquidity wicks are. And let me just zoom in a little bit. Like this drawing hella small. All right, so since we said this was going to sell, we would want to set a horizontal line here where we see some wicks. We want to set it here, right, where we see some wicks. And then we want to set one here because that's where we see some wicks. And again, to simplify and to trust your analysis. If this is going to sell, our TP is going to be right at the previous low. Like, it shouldn't be any guesswork. We see the head and shoulders pattern, right? We see the left shoulder is complete. We see the head is not complete. In order for it to be complete, this will have to sell. Oh, sorry. I don't know why this pencil did that. This will have to sell, right? And then in order for the right shoulder to be complete, it will have to buy eventually down here. So 2 trade ideas already that we said that you guys can enter actually now will be Euro USD for a sell and GBP USD for a sell. And again, we can confirm this with our indicators, and we can look at this on higher time frames to see. And it's still giving the same thing. If you guys agree, drop some 7s in the chat. If you think something else, drop a 3 in the chat. Let me know what y'all think so far. Are we looking at sells for GU and EU? And then remember, your indicators, you can use them at the end. You can use them at the end just to say, okay, is this what I'm seeing? Is this going to be a reversal? You can even take it up to the weekly. Oh, let me delete this drawings. And look, even on the, guys, look at this. Even on the weekly, if you guys want to start practicing swing trading, look, what do we have? We have the sell, right? Then we have up, down, up. It has to come down, right? On the weekly, it has to come down, right? It has to come down. So this trade can be going for a while. If you would like to stay into this trade. Then we also have the stochastic. It hasn't quite crossed over, but it wants to cross over. And then the momentum is also about to cross over. So on the weekly, let's actually, yeah, I'm looking at Euro USD for a sell, y'all. That's just what I'll say for now. So yeah, another thing. Oh yeah, that's actually another thing that I think people struggle with is looking at the taking your trades on the wrong time frames. Like, if you look at it in a certain time frame, you should be going for a certain amount of pips. If you look at it on a smaller time frame, you should be going for a different amount of pips. So for example, if we were looking at it on this weekly, we should probably be going for 150 pips on this trade if you wanted to get in for a weekly sell. And that's something you guys can, I don't know, write down or note, like the different time frames and the pips you should be looking for. So on the weekly, it's definitely going to be 100 plus, right? It's definitely going to be 100 plus. And I'll just do that, right? Because I think sometimes we're looking at it on a 4-hour and then we're taking our trades on the 5, and then it seems like it's taking a long time or we're getting stopped out. But the pips that we're going for has to be appropriate to the time frame that we're looking at. So this is the weekly, and we're going to say that's 100 and something pips if it's going to sell, right? Okay, so now we go to the 4-hour. Let's reset our chart. We can add some. This is going to be such a beautiful sell, right? Then we come down here. If you're looking at a 4-hour, you should be looking for 50 pips minimum. Yeah, keep looking at it, because if it's selling on the weekly, you know it's about to be crazy like all week. It should be multiple opportunities to sell. And yeah. So on a 4-hour, if you're looking at it on a 4-hour, you should be looking from anywhere from 50 to 75 pips, right? So in this case, we can see, and this is our 4-hour resistance. Let me just change the color and turn it red. This is our, this is our weekly resistance is red. Our 4 hour is going to be orange. We can go to the 1 hour and see if we get some new resistance up in here. There's one right there. And yeah, this is pretty much looking like a great trade to take a sell on. And then our TP will still be down here. And I'll just turn that purple. So yeah. And your stop loss based, oh yeah, so I'm supposed to still be going through the things. If you're looking at it on the 1 hour, it's going to be anywhere from 25 to 40 pips. That's what you should be trying to secure in that time. So yeah. If it's the weekly, and you want to get in and you hold your trade, you should be looking at like 150 pips or more. If it's the 4 hour, you should be looking at 50 to 75 pips. If it's the 1 hour, you should be looking at 25 to 40 pips. And anything less than that, you just scalping and the market can do whatever it wants. Trade HFX. So yeah, that's another mistake I think people make, is not taking your trades on the correct time frame. Because that really will help you. Because we can look at this and we can see this is our weekly high, right? This is our 4 hour. This is our 1 hour. This is our 15-minute. And we can see it's still, we can even get a little trend line up in here, right? We can see it's still selling, right? The trend line has to touch at least 3 high points for it to be valid. We can see that this trend is going to sell. And again, if we extend this line, it's taking us to this well. If we extend this line, it's going to take us to pretty much the same TP. So yeah, I'm going to actually enter this trade now so I don't miss my entry. Also, I want to ask you guys, how is your if you started selling all week pretty much. Yeah, so I will look for EU sales for the week, y'all. And again, if you don't want to do that, because this is another thing I think people have an issue with, is you can set your sell limits, right? A sell limit can either be a sell stop, or a sell limit. So your sell stop is, let's just say, okay, let's do sell limit first. If you're going to do a sell limit, we can see that the market is currently right here. Sell limit means the market is either going to go back to the yellow, the orange, or the red line before it comes back down to the purple line. So sell limit means it's going to go back up and revisit a previous high before it comes back down to what you want your TP to be. That's a sell limit. Now, a sell stop is the opposite. A sell stop says the market is currently here, but you're going to set your entry here. So as it drops, it's going to trigger here, and it's going to continue to drop and hit your TP. So sell limit is above the entry because you need it to go up before it comes back down. And sell stop is it's going to hit it on the way down to the purple. If that makes sense, guys, drop some 7s in the chat. Okay, good. Good. All right, awesome. And again, you can always turn back on your indicators to confirm. And we just reviewed this. We can see that price is starting to fall under. Oh yeah. Definitely. Make sure you set your TPs and SLs appropriately. So you can see that price has started to fall under the blue line. Under the blue EMA, right? It's starting to consolidate under, which also confirms our theory for a sell, right? Even though we have the stochastic down here acting up on the 15-minute, it's already been confirmed on multiple time frames that this could potentially sell, right? We looked at it together. Sometimes the market be doing what it want. You may have a lot of resistance from the buyers where they want to take it back up here and then bring it back down just so they get a better entry point. But it's all up to y'all. Again, you can get in that market X now, or you could set your sell limits at the green line, the yellow line, or the orange line. So I'll drop these in the chat. Because 1.10356 is not too high. Sell limit, let me put EU, right? Okay. EU sell limit. Let me do another one. I'm just going to put everything that's here on the chart. So yeah, I would expect this to be a pretty decent trade. if it plays out for a sell, because this market really wants to break 111 again. And if it does it this week, that's going to be wild. 1.11000. All right, guys. So I'll put them in the chat, and I'm also going to put it in the other chat too. But do you guys have any questions so far? Or do you feel like you struggle with any of these issues? You can drop 1, 2, or 3 in the chat based on the 3 issues we went over. So the first one is overcomplicating your analysis. If you struggle with that, you can drop a 1 in the chat. The second one was having a lack of confidence in your trade. If you struggle with that, you can drop a 2 in the chat. And number 3 was using the wrong time frames for your entries. And if you struggle with that, you can drop a 3 in the chat, right? Okay, so at least you guys are getting it. That's pretty good. That's pretty good. But yeah, do y'all have any questions so far? I really need to get into this trade. How many pips is this? 110, 23. All right, Teresa, what's your question?
Yes, so when I'm setting my risk to reward, it's hard to sometimes get it on 1.2. Sometimes I get it on 1.02. Is that still okay?
What do you mean?
When I'm setting my take profit, my risk to reward ratio, when I trying to bring it to exactly 1.2, sometimes I can't get it 1 to 2. I get it 1.02 or 1.03.
I mean, yeah, that's fine. That's fine as long as you are making sure that you secure your profits. It don't have to be exact. Like it really don't have to be exact, but are you always like letting the trade play out and hit the TP or SL, or are you getting out once it's in profit?
No, I'm taking it all the way down to the end.
Okay, good. That's good. Yeah, because we'll see that most times. Let me not say most times. I would say a lot of the times the trades really do go for 1 to 2. If we can just wait it out. So, and I'm just going to show an example here. So let me take off. Is that a tool or indicator? I'm gonna take this off, and I'm gonna get my long position tool, and we're going to use. We're going to get in here. That's going to be our entry right there. So we're going to set our stop loss. Wait, let me drag it actually. And we're going to see. And you can back test this as well. I always recommend everybody back test everything. So pretty much if we were going for a buy right here based on whatever indicators that we had, actually let's do here because this is an even better entry. We have much more confirmation. So if we're going to get in there, we want to set our low, our stop loss at the previous low. So this needs to be a little bit lower. So we're going to make sure it covered the previous low if we're getting in for a buy, and we're going to see what that is. So that stop loss is, let's just say 65 pips. So what's 65 times 2, like 130? Okay, look, perfect. Literally, if you see this trade right here, you just did your 1 to 2. If you would have just let it play out, then it would be fine. Like you can do a 1 to 1, but you can see this trade would have perfectly played out. Uh, I would say 3 would be mine. Like 1 to 3, yeah. 1 to 3 isn't bad. Okay, so that was a buy example. So you can see if you set your stop loss 1 to 2, it played out there. And it really just go back on your chart when you have some time and just really test it out. Because if you're all going based on the previous things that happened, so we trying to look for the previous high here. Oh, it wasn't that much. So let's just do a standard 25 pips. We want to get in there. We're gonna do stop loss, or say 50. So let's do 25 and let's do 50. Oh, supposed to do a short position. Sorry, y'all. Let's do it to the last resistance of the week. Okay, so that's about 31 pips. So we're gonna make our profit 62 pips. And that's 1 to 2. And that also played out. So yeah, I mean, if you feel more comfortable doing the 1-to-1, you can. You could try the 1 to 2. But again, just be mindful of the time frame that you're analyzing and the amount of pips you're going for. Because if you're trying to go for 100 pips on a 15-minute time frame, it might not work because your stop loss may be too tight. So that's just what it is. And I'll just drop the times in the chat as well, so that y'all can remember. And I'll put them in the Cosmic Club chat as well. So for 4 hours, okay, so we're gonna do weekly is 100 plus pips for sure. Then we have the 4 hour, that's going to be 50 to 75 pips. Then we have the 1 hour, that's going to be 25 to 40 pips. And then anything below that is scalping. Any pips. Choose your poison. All right, there we go. So do you guys have any questions so far? Because I think those are the main things that I really wanted to cover for today. Again, I'm only going to give as much information that I just feel like is needed. I'm not going to overtalk or keep you guys too long. It is Sunday. But if you have any questions, any other questions, let me know. I am going to post this video in the chat as well. Yeah, I'll give you guys a few seconds. Also, guys, you can just drop in this chat here and let me know how your trading challenge is going. Not trading challenge. Essentially, yeah, how your trading plan is going if you started it. Is it going good? Is it going bad? Are you starting this week now that NFP is done? Okay, not well, going to start again. Okay, it happens. Are you going back to analyze your trades once they play out? Or do you need me to go over some of them with you, or you're fine with the analysis? All right, so how
I
many?
may need to go back over them, but in a time convenient for you.
Okay, all right. Yeah, you could just text me and let me know because my schedule for this month is pretty open. I'm just going to be on vacation starting Sunday. So we can do it this week or anytime after the 21st. So, all right. Okay. All right. Well, it doesn't seem like you guys have any questions. Again, the pairs that we can look at for the week, that I know I'm going to be personally trading on are going to be GU, and Euro USD. We did do an in-depth look at Euro USD, so we can assess that this market is going to be selling. Again, you can use any of these previous lines, the yellow line, the orange line, or the red line, either as your sell limit entries, or your stop loss, right? That's going to be basically up to you. I'm probably going to be setting, I might get in for a market X now, but I'm also going to be setting a sell limit up here at this orange line, simply because with the head and shoulders, it might go up a little higher. So I'm gonna set a sell limit here, and I'm also gonna take a market X down here. So even if this one doesn't trigger, I'm still in profit for a little bit, and I'm just gonna set my TP at the purple line, which is, let me just do it now, duh. I'm gonna set my TP. I might set a sell limit at 300. So I'm gonna set my stop loss at 250. And then we can extend it based on what we see. Sorry, I'm just saving this in the chat for y'all. But yeah, that's pretty much it for today, y'all. Thank you for coming. I will see y'all hopefully this week if y'all book a 101. If not, in 2 weeks. Okay? So have a good night, everybody. I'll drop the ID in the chat.